Welcome back to the cryptoworld channel, everyone. My name is Josh, and right now a new warning signal is flashing for Bitcoin as the price is still playing out this bearish divergence as the Bitcoin ETFs just had one of their worst days on record. So I'll be talking about my short-term Bitcoin trading strategy in just a moment, alongside the upcoming Federal Reserve meeting happening tomorrow, while Ethereum is now running into the final area of support on the chart before potentially much lower prices, while Solana is also now flashing a new warning signal that we need to pay attention to. So I'll be talking about all of that and more later in the video, so definitely watch to the end. First of all, we need to talk about the Bitcoin ETF news today, because just yesterday we actually had one of the worst days on record for the Bitcoin ETFs. Because unlike basically every day we've seen over the last few months where we've had massive inflows coming into the Bitcoin ETFs, yesterday we actually saw a decent net outflow, which meant more money actually left the ETFs compared to what came into the ETFs. And so yesterday we actually had a net outflow of over 154 million US dollars, which is bearish. Anytime we have a net outflow, that is bad news. And so it's very obvious as to why we saw a further pullback in the price of Bitcoin, especially over the last one day, because once again, we had this extra selling pressure from the Bitcoin ETFs. And if we're looking at the breakdown, most of that selling pressure, in fact, basically all of that selling pressure came from, of course, Grayscale, once again with another outflow. But this time around, just yesterday, they had their biggest outflow yet. Because just yesterday, Grayscale alone sold over $640 million worth of Bitcoin. And if we're looking at the inflows into the other ETFs, we saw a decent inflow into the BlackRock ETF of around $450 million, so that was standard for BlackRock. But what we also saw yesterday was a record low inflow for Fidelity, because if we're looking at the Fidelity Bitcoin ETF, we only saw an inflow of less than $6 million for yesterday, and their average inflow is around $150 million, and their largest inflow is close to $500 million. So obviously, an inflow of only 5 to 6 million is nothing for Fidelity. And so due to those two factors, due to a record low inflow into Fidelity, combined with a record high outflow out of Grayscale, that gave us the net outflow at the end of the day, basically more outflows than inflows. And in case you're new to all of this, you can think of inflows as buying Bitcoin and outflows as selling Bitcoin, which is why outflows are bearish and inflows are bullish. And in case you're wondering how much Bitcoin Grayscale still actually holds, right now Grayscale is still holding over 383,000 Bitcoin worth over 24 billion US dollars. And so obviously they still hold a significant amount of Bitcoin, which means technically they can keep up this selling pressure for a while. But keep in mind, even though it's a lot of Bitcoin that they're still holding, it is still a limited amount of Bitcoin. It's not an infinite amount. And so basically, if they keep up this selling pressure, then soon enough, whether it's in a few weeks or a few months, soon enough, they will run out of Bitcoin at some stage. And obviously, when they run out of Bitcoin to sell, there's no more selling pressure from Grayscale. And keep in mind, basically this entire time, despite what the other ETFs have been doing, BlackRock has been a fairly consistent buyer with massive inflows almost every day into the BlackRock Bitcoin ETF. So keep that in mind. And speaking of consistent buyers, we also have some other Bitcoin news today, with MicroStrategy just buying another large amount of Bitcoin, over 9,200 Bitcoin they just added just recently into MicroStrategy for over 600 million US dollars. And so due to this recent purchase from MicroStrategy now holds over 1% of the total Bitcoin supply. And so obviously this is yet another large buyer in the Bitcoin market that is not slowing down anytime soon and is basically consistently buying Bitcoin no matter what the Bitcoin price is, whether it's trading at 20K or 60K, MicroStrategy is pretty much always buying whenever they can. And so obviously with Bitcoin being a limited, very scarce asset, with large players like this, like MicroStrategy or BlackRock buying a lot of Bitcoin very consistently, obviously this is very bullish for the price of Bitcoin over the longer term. But anyway, with that being said, quickly covering the upcoming FOMC meeting, also known as a Fed meeting, which is happening tomorrow. And this can indeed have a significant effect on the price of Bitcoin and other crypto assets, depending on the outcome of the meeting. And basically, the Fed's interest rate decision, where they actually announce their decision on interest rates, basically whether they're raising, lowering, or keeping interest rates the same, that will be happening at exactly 6 p.m. in the GMT time zone tomorrow on the 20th of March. And so that's almost exactly 1 day from now. And based on the expectations, looking at consensus and the trading economics forecast, they're both expecting no change in interest rates. And if we're taking a look at what the futures market is pricing in right now, the futures market is also betting on no change in interest rates, with around 99% probability that we're not going to see any change in interest rates tomorrow. And so what that actually means is if we end up seeing no change in interest rates with tomorrow's Fed meeting, basically what everyone is expecting, then that should be neutral for the markets because everyone is already pricing that in. But if we somehow see anything other than no change in interest rates, that is where we could see a lot more volatility in the markets. Like for example, if we somehow see an interest rate cut tomorrow, then that will likely cause markets to spike to the upside very quickly. But on the other hand, if we see an interest rate hike somehow tomorrow, if we somehow see an interest rate hike, which means raising interest rates tomorrow, then that will likely cause a dump across the markets. And also, if we end up seeing that neutral outcome of no change in interest rates, then once again, that should be relatively neutral for the market. But roughly around half an hour after the Fed's interest rate decision, we have the Jerome Powell press conference. And depending on what he says in that press conference, could actually affect the market in the short term. So as always, I'll keep you up to date in real time on all of that over on my Twitter, link down below in the description and in the pinned comment. And also, as always, as soon as the new interest rate numbers get released, within seconds of them being released, I'll be sure to tweet them out over on my Twitter in real time. So once again, if you want to get those extra real-time updates, check out my Twitter, link down below. But anyway, with that being said, getting into the Bitcoin chart, this is on the weekly Bitcoin chart, once again comparing what we're seeing right now to the previous bull market back in 2020. And obviously right now we're somewhat struggling around that all-time high breakout, around that 69k level, basically struggling to break out above that level on the weekly time frame with weekly candle closes. But this is exactly what happened in the last bull market. This is not anything new. We've seen this happen before in last bull cycles. And in fact, if we're measuring out some of these rejections that we saw in the last bull cycle from that all-time high breakout level, we saw a rejection of around 16% right on this weekly candle. Or if we're looking at the weekly candle before that, we saw around a 17% pullback from that all-time high level. And so keep in mind, if we're seeing 10 to 20% pullbacks, that is very normal to see even during a bull market, especially when we're around that all-time high breakout. Because once again, last time we struggled around that all-time high breakout for around 3 to 4 weeks before eventually we saw a major breakout to the upside. And so just keep all of that in mind. Once again, here on the larger time frames, we're still in a bullish market trending further to the upside. It's just right now in the shorter term, we're struggling around that all-time high breakout level. And if we're taking a quick look at this 3-day Bitcoin chart, we can see that so far during this very bull market that we started at the start of 2023, we've actually seen 4 decent pullbacks along the way so far, apart from the current pullback that we're seeing at the moment. And so far, all of these pullbacks have been around 20% pullbacks. Pretty much 20 to 23% pullbacks has been the standard pullback so far for this bull market. And so let's just say if we were to see another 20% pullback from the high to low, that will put the price of Bitcoin at around $59,000 approximately. But like I've explained in recent videos here on the channel, this time around we do actually have the Bitcoin ETFs, whereas the first 3 times we did not have any spot Bitcoin ETFs in the US. And this pullback that we saw in January this year, we saw significant outflows from the spot Bitcoin ETFs due to grayscale. And so once again, if we're seeing significant outflows continue from the spot Bitcoin ETFs, yeah, we could see a continued pullback in the price of Bitcoin. But if we start seeing more inflows again into the Bitcoin ETFs, then we might not get the full 20% pullback. But right now, if we're looking at the DXY, this is continuing to spike to the upside, which is yet another warning signal for Bitcoin, because as you can see here, when the DXY is bullish, that is almost always bearish for Bitcoin and crypto. And obviously over the last 1 week or so, this has been playing out exactly as expected. We are now seeing this short-term bearish price action as expected due to the DXY also spiking to the upside, which is something that I've been talking about over and over again here on the channel. But ultimately, this is just looking at the shorter term. Of course, when we're looking at the bigger picture here, the larger trend at play, we're still clearly within a bull market trending further to the upside on the larger timeframes. And if we're taking a look at the 8-hour Bitcoin chart, of course, this bearish divergence is technically still active, as I've been warning about every single day since all the way back up here at around 73,000. And so once again, as I've been saying since all the way back up there, this bearish divergence means we should be expecting either neutral or bearish price action in the short term, basically reduced bullish momentum, because that is the most common outcome from a bearish divergence. But keep in mind, if we're looking at the 8-hour Bitcoin RSI, this is getting very close to oversold territories. And if we're looking at the last time the 8-hour Bitcoin RSI entered into oversold territories, that was right around a local low in the price of Bitcoin before a recovery later on. And so just keep that in mind as well. Even if we do see a further pullback, then we could soon see the RSI go into oversold territories on the 8-hour time frame, meaning we have somewhat limited room to the downside. And if we're zooming further into the short term, looking at the 4-hour Bitcoin chart, once again, over the last one day, we saw that further pullback to the downside due to those massive outflows from the Bitcoin ETFs, mainly due to grayscale. But just recently, we saw pretty much a perfect bounce from this area of support that I've mentioned recently on the channel. And this area of support is sitting in between around 61,000 to 62,000. And we saw a bounce pretty much just above 62,000, only around $100 to $200 above 62K. And it looks like right now the price of Bitcoin could even start breaking out above this previous area of support, which should technically act as resistance right now, sitting in between around 65,000 to 66,000. But if we see a breakout back above 66,000, the next resistance starts at around 68,500 and goes up towards around 70,000. And if we start breaking back out above 70,000, then it would be pretty much safe to say at that point that we're basically in the recovery stage and we're about to soon head up towards the all-time high at around 73 to 74,000. And now, with all of that being said, taking a look at my trading strategy for Bitcoin right now, my trading strategy has not changed at all over the last few days. I've been talking about this exact trading strategy over the last few days non-stop. And once again, over the last one day, we saw another dip to the downside in the price of Bitcoin, which actually triggered more of my buy orders for my long position, which I shared here on the channel. I have a lot of buy orders to the downside, so the further the price goes to the downside, the bigger my long position gets and the lower my entry price is. And so basically, the further Bitcoin goes to the downside, the better that is for my long position, because I get a better entry price and I'm able to take a bigger opportunity, a bigger trade on those lower prices. And then also, if Bitcoin bounces back to the upside, that is of course good for my long position as I'm profiting from that trade. And so basically, with this trading strategy, with a lot of these buy orders all spread out between basically right now all the way down into the 50K range, basically with this strategy, it doesn't matter if Bitcoin bounces at 64K or 62K or 59K or 58K or lower. If Bitcoin bounces anywhere in that range, I am making money with this position. And if you want to take trades just like this for the price of Bitcoin or any other crypto to maximize your profits in crypto, then make sure to check out Bybit, which is exactly why I'm taking this trade. And so I'll make sure to leave a link to Bybit in the description down below and in the pinned comment. And also, if you use that link down below this video to Bybit, you can get up to a $30,000 deposit bonus, but only if you use that link down below this video. And also, there'll be two links down below this video to Bybit. The first link will take you to this page right here, which is the Bybit Traders Year of 2024, which is basically a massive trading competition happening right now over on Bybit with 4 million USDT in prizes. And on top of that, there's also another trading competition happening right now over on Bybit with up to 2.3 million USDT in prizes. And so once again, if you're trading crypto anyway, or if you're preparing to take the next trading opportunity over on Bybit and you want to enter these trading competitions to potentially win a share in millions and millions of dollars of prize money, then you might as well check this out. Once again, links down below this video. But anyway, taking a quick look at the Bitcoin liquidation heat map, and right now we still have a lot of liquidity sitting at around 69,000 here in the short term. And we do have some short-term liquidity to the downside sitting at around 62,000 and some liquidity at around 68.2K. But when we're zooming out on this chart, we can actually see a larger level of liquidity to the upside, which is sitting at around $74,000 approximately. And so once again, we have two major levels of liquidity in the short term, which are both to the upside at around 69,000 and around 74,000. And so basically, as soon as we start seeing the buying demand return in the ETFs, for example, by seeing net inflows into the Bitcoin ETFs and things like that, then those will be potential short-term price targets. Once again, 69K and 74K due to a lot of liquidity sitting at those levels. But anyway, now getting into the Ethereum part of this video, this is on the weekly time frame, and right now this is not looking good for Ethereum if we actually close this weekly candle back below around 3.4K. And the next weekly candle close is still in around 5 days from now, so we still have plenty of time before we see this next weekly candle close confirm. But basically, if we do end up confirming the weekly candle close back below 3.4K, then that basically means we could potentially see much lower prices for the price of ETH. Because first of all, looking at this chart on the linear settings for the Fibonacci retracement tool, we have the next important support level sitting at around 2.9K if we confirm this break below 3.4K. And below that, we also have major support right down here in between around 2,500 to 2.7K. And so basically, if we end up seeing this weekly candle close confirm below 3.4K in around 5 days from now, then we could likely see the price of ETH drop below $3,000. But even in that scenario, even if that does actually happen, which once again, it might not happen because we might not close this weekly candle close back below 3.4K, but even if that happens, we can still remain within the larger bullish trend, also known as the bull market, because obviously we can see decent pullbacks along the way, even during a larger bullish trend. And with that being said, zooming into the short term, and right now the price of ETH is basically running into the final short term area of support, which is sitting in between around 3.2K to 3250 based on previous support back here. And now if we end up seeing a further bounce back to the upside, we have this resistance sitting in between around 3470 to 3530 and more resistance in between 3750 to 3.8K. But once again, if we start breaking below this area of support, below 3.2K, then honestly, we could see prices below $3,000 in the coming days or weeks if we do not quickly confirm some sort of recovery very soon in the short term. And if we're taking a look at Solana just in the short term on the 4-hour time frame, we're actually seeing a new bearish divergence play out with higher highs confirmed in the price and lower highs confirmed in the 4-hour Solana RSI. And so once again, a bearish divergence means we should not be expecting any significant bullish momentum in the short term, and instead it's very likely we're going to see either neutral price action or bearish price action in the short term as the most common outcomes from a bearish divergence. And so right now, that is simply playing out in the short term, so I would not be surprised if we do end up seeing a bit more of a cool-off for Solana over the coming hours and days. But ultimately, on much larger time frames, we're still within a larger bullish trend, forming significant higher lows and higher highs on the weekly time frame, for example. And also, we have significant support in this price range right here, sitting in between 120 to 140. And once again, if you want to trade these moves in the price of any crypto, then make sure to check out the exchange's links down below this video. And if you want to actually know how to trade crypto, then make sure to watch these videos popping up right here on your screen. The video in the top left shows you how you can long or short crypto to make money if the price is bullish or bearish. And the video in the bottom left shows you how you can easily profit from choppy sideways price action. But anyway, that is everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.